What do you think about Tom Lee's call here? From a technical, he laid out the sort of fundamental case as to why the FANG stocks deserve a double upgrade. What about the technical case? Are they ready for a bounce and a breakout?
You know, I think that makes a lot of sense. For us, I think the FANG trade and some of the mega cap tech trade, I agree that it's a bit of a positioning reset. I do think people got a little too, probably ourselves included, got a little too negative on some of those growth names. But our call there is more of just maybe a stabilization. I mean, you look at what, Apple and Amazon, they've been sideways for most of the past year. I don't know that drastically changes. I think you could have some modest upside there. But I just think it's this constant churn under the surface, and it's just frustrating a lot, both bulls and bears. So I don't think there's a runaway move to the upside in FANG like we saw in 2013, but I think you could see some money kind of rotate there and kind of steady the ship somewhat.
Let's be clear, too, Tom. I mean, Facebook, Google, it's not like they've done nothing, right? They're basically at all-time highs. And as I said, over the last month, Google, Facebook, 7.5% respectively in terms of the jumps that they've had.
Yes. One thing I always think about is something Tom Luddy has told me quite a long time. He's vice chairman of JP Morgan Asset Management, which is when things are less bad, that's good. And I think the environment around FANG has been pretty tough for the past year. And their underperformance really stands out because for the last 7 years, they've been such darlings. So to me, if you can remove some of the sort of headwinds for them, and then you think about that $3.2 trillion of institutional money market cash on the sidelines, which is almost as high as it was in May 2020. We think a lot of our institutional clients, when they come back into the market, risk on, it's really going to go into the liquid names they know well, which means that they'll start buying FANG because some of the clouds are lifting. And I think Jonathan Krinsky is correct. They're stabilizing here, so there's a lot of proof that they can break out. But our sort of probabilities are that there could be quite a significant breakout in the next couple of months. The
other issue to deal with here, Krinsky, is one of the reasons behind your call today on the industrial stocks, which is, by the way, to sell them, is because they've had such a big move off of the bottom. Like a lot of these cyclical, reflationary, reopening stocks have already had such a tremendous move. At some point, you have to believe that the steam is going to get a little bit less, if not stop entirely, and that there's going to be a rotation into the more growthy names like we're talking about here, whether it's some of the Cathie Wood stocks that have come down from their lofty valuations or the FANGs, which is a broader call now. Is that part, the industrials, you're saying to broadly, you're not even being very selective. You're saying to broadly sell the group.
Yeah, so I think, Tom's calling on the banks to some extent that jives with our call on industrials. They do tend to trade somewhat together as kind of this value cyclical reflation trade. But, we're not as convinced that rates are done going up. I think, some people got caught off sides in the last few days. But, our view is that rates probably do actually head back to the upside. So that's going to keep somewhat of a floor, I think, in financials. Industrials, though, they've been one of the best performing sectors over the last 12 months. But over the last 2, 3, 4, and 5 years, they've actually underperformed the S&P. So they've been a pretty poor long-term relative trade. And really what's concerning to us in industrials, you're starting to see some of the key stocks and industry groups within industrials, they started to break down on a relative basis in the last couple weeks. And in the last couple of days, you're seeing names like Caterpillar and Deere really start to break to the downside. And let's be clear. Let's take a name like Deere. This name was $100 at the COVID lows. In 14 months, it went up to $400, so 4x, and more than twice what it ever was pre-COVID. So there's just been a massive, move in some of these mega cap industrials. And there's, from our perspective, that air pocket that they saw to the upside, when you see moves like that, once they start coming back to the downside, you see an equally fast air pocket to the downside. So we'd be pretty careful here on some of those names. Even some of the rails have kind of been almost seeming invincible to any sell-off. And I think, people are a bit complacent in some of these names.